Jim, the housing market in St. Louis and across the country is absolutely booming. I mean, I hear time and time again tales of houses they go on the market, they're snapped up quickly, they get multiple offers, they sell for 20,000, 30,000, even 50,000 over the asking price. In a moderately priced market like St. Louis, this is unheard of.
It is. I've looked up some statistics I'd like to share with you. This is for May from the St. Louis Realtors Association. Okay. The median sale price in May is up 20% year over year since last May. Of course, last May we were in the middle of the lockdown. Sales are up 12.5%. Houses are sitting on the market for 23 days now versus 38 days last year. There are only 2,900 houses on the market now versus 4,500 last year. This is a seller's market, like you wouldn't believe.
Yeah. Well, and the problem is when if you're thinking about moving up to a larger or different house, you're going to be reluctant to put your house on the market if you're not sure you're going to be able to buy something. So this problem compounds on itself. The low inventory kind of breeds even lower inventory. Those number of houses on the market has kept going down and down. In fact, in the U.S. now, we have more realtors than we have houses for sale.
Okay. Which is crazy when you think about it. Yeah, there are a couple of other factors here that are going on. And we have obviously low interest rates, so you can get a mortgage fairly cheaply. You have certain demographics. The millennials are getting well into their housing purchase years. You have, again, the reluctance to move. But I also, and of course, the effect of the pandemic, people wanting more space because they're working at home. But I also think that we have a little bit of a bubble building here, particularly. I think that all the publicity and the sudden rise in prices is driving people into the market who wouldn't be there otherwise. You have a young family that's thinking, well, I'm going to buy eventually. They see prices going up this fast, they run into the market, and they drive up demand that way. And I think it'll end not with a crash, but not all that well, because eventually we're going to see higher interest rates. We're going to see that pent-up demand disappear, and we'll get back to reasonable rise in home prices, and perhaps even a freeze in home prices for a few years. What do you think?
I don't see it as a bubble, and I don't think that many people are jumping into home ownership, out of panic that they won't be able to buy down the road. I just think the low interest rates and the other factors that you mentioned are enticing a lot of people into it. Think it's a great at 3% 30-year mortgage. They can afford it, so why not? The way we usually typically would get out of such a situation, we build more houses, but a lot of builders went out of business after the last housing crisis. A lot of construction workers left the industry, and now lumber prices are going through the roof. So there are a lot of factors kind of dampening the construction of new homes. So it's gonna take a while to get out of this situation.
Well, actually, in the St. Louis area, we're seeing home builders begin to respond to this. For instance, for the first 4 months of this year, which is not prime home building season, new permits for new single-family homes on the Missouri side of the metro area were up 18% over 2020, and they were up actually 31% over 2019, which was before the pandemic. So we're seeing some response there, not overwhelming, but builders are building. Right,
and that's what that's why I think that it's not a bubble. It's really a kind of being driven by fundamental factors, and it'll only correct after we get probably higher interest rates, an extended period of more home building, And people gradually get comfortable putting their house on the market.
I think so too. And perhaps it may be a factor of the craziness of this market, or it may be something else. But we're seeing effects at the low end, the very low end of the house.
Yeah.
For instance, city tax sales are selling out, and these are junk properties, but they used to not move very well, and now they're selling out. And if you look at the most recent months figures for where percentage price increases are highest,
Yeah.
not the sale price of the house, but where they're rising the fastest. In St. Louis County, it tends to be those inner ring black suburbs. There's something odd. I'm not quite sure I understand what's happening there.
Well, I'm not sure either. What is happening in some parts of the country is there's a lot of investor interest in housing. Some of the Wall Street firms have formed housing investment funds, and they're bidding against families for affordable housing, thinking they could get a good stream of income by owning the house and renting it out. I don't know whether that's going on in St. Louis to a great degree, but that could be part of the reason. Also, houses, as you know, those areas, housing prices have been very depressed for the past almost 15 years since they were hit hard by the foreclosure crisis.
Yeah,
and it's actually I think it's good news if they're finally starting to come out of that.
I agree.